I feel like it's not always easy to find growth stocks that aren't tech. KKR pretty much fits the bill for one that is not tech, that still fits the growth stock mold pretty easily. Over the last 5 years, it's up 385%. S&P 500 is only up about 90% over the last 5 years. This is a stock that has performed exceedingly well by basically every metric you could look at. Forward dividend yield is about 0.5% as well, so it even pays an okay dividend on top of it. And I assumed it was much higher back when we were half as expensive even just a year ago, right? PE ratio 44, a little bit expensive. Shouldn't be that surprising when this company has done exceedingly well. You would expect a higher PE because of that. If we go back to 2015, 10 years ago, this company was at 20, somewhere in that 22, 23, 24, 25 range. Now at 140. It's done very, very well. In the 10 years as well, you've done even better than you have over the last, 5 years. Although most of the growth really has come over the last 5. It was at about 29. So this is a stock that has really done well over the last 5 years. Let's take a little bit of a look at some other things, forward PE specifically. Forward PE is 32. So whether you want to compare normal PE or forward PE, this is a stock that does have clearly some extra expense to it compared to an S&P 500, but you would expect that for a company that has done so well. That's what the pinnacle of growth stocks are. You have to pay higher PE on them. You have to pay a higher expense because these companies perform exceedingly well and everyone wants a share of them. And so I think I mentioned they were not a tech stock specifically, and they aren't. They're an investment. They manage all sorts of investments into all sorts of different companies. They clearly have done very well on it. It's interesting how, they're kind of grouped in with like a Schwab or something. Although, they don't really do too much of a similar thing in my opinion. That's more of a gripe with how it's categorized. But yeah, they do investments, all sorts of different stuff. And they've done, like I said, exceedingly well on it. It's good that you're getting more growth. You can see clearly they're projecting a lot more growth for the next year. And it is interesting. I usually don't like these sorts of companies too much. Maine is another example, far smaller. This company's $132 billion market cap. Maine's like 5. But both of them seem to do very well investing in other companies, taking large stakes in them, and they've done very, very well. So I think if you are looking for a stock that you can have some extra risk on, higher PE, in the terms of recession, obviously you're going to get hit a bit harder just because of that PE valuation. But also maybe you want some diversification out of tech. I think this is a good one to look at. Maybe you love all sorts of these sorts of investment firms. Then you probably wouldn't mind adding more. But if you don't have anything like this, I think it's definitely one to consider then. Of course, not financial advice. That's just my opinion. Diversification is always good. Certainly, if you're looking for, like I said, a growth stock as well, because this one clearly fits the bill very well. Let's see some of the PE to see where it's valuated. Yeah, I mean, it's a bit more expensive for a PE. It's 24 compared to 13. But people are catching on to, oh, this thing has done good. I mean, over the last year, it's up a bunch. But people are starting to get like, oh, wait, this is really impressive stuff that they are doing. 70% over last year. That is awesome. And analysts are still saying buy. Actually, maybe some of them changed, but if they did, they'd change the same amount because over the last 4 months, it's literally a mirror. I've never seen that before on one of these videos, so I think that's kind of interesting. But 17 of the 20 analysts are saying buy or strong buy. Usually for growth stocks, you want about 2/3. So if you use analysts as a strong indicator, we're a bit above buy recommendations than normal you would expect, at least from what I've seen. And the price target's a bit above as well. I think I like this stock. I think I do as a long-term hold. I don't know how well it will do over a year or two. Anything could happen. But I really do think KKR is a nice, safe investment. We changed the thing here. Let's go count. There we go. You should do fine on it. That's what I would expect. Of course, like I said, not investment advice. But this is a company that has done exceedingly well, managed money well. It's, like I said, has a high PE, but you would expect that for a company that's done this great. So if you enjoyed, I appreciate you for watching. Leave a like or subscribe if you're new. I do daily stock counts on this channel. I appreciate all of you for watching, and I'll catch you next time.